I think the next meeting it's still too soon. I mean, just speaking for myself, my colleagues will have to make their own choices. The next meeting, we're still getting data. Sure. A lot of the data that we're getting is still old. It still does not show the full effect of the tariffs. So my best guess is we're going to be on hold here for a while. The housing market in the U.S., because mortgage rates have been high, at least by American standards, have been high for a few years. The housing market has really been quite frozen in the U.S. It seems like that's going to be continuing. We're not yet seeing the full effect of tariffs on the cost of inputs, the lumber that we might buy from Canada. That is not yet fully showing up yet. There's also an immigration component. A lot of homes in America are built by immigrant workers. To the extent that there are fewer immigrants coming in to build homes, that also could have an effect on the housing market in the U.S.
With regards to the weakening recently of the US dollar, with the Dixie falling below the 100 mark, Neel, is there any risk at all to the US dollar dominance as the world's reserve currency, especially with all the various sort of disruptions and reordering of the global economic and trade order?
Whatever currency is the quote-unquote reserve currency, it really is the major economy that investors have the most confidence in. And if Asia is particularly strong, or if China is particularly strong and the outlook is particularly optimistic, or the Eurozone, then those obviously could be credible competitors to the dollar. Right now, I still think the U.S. economy has the strongest fundamentals of any major economy, but ultimately how this reordering of the global trade system, how it ultimately settles, I think it's far too soon to know, and it's something worth watching.
It certainly is worth watching. Another thing worth watching is the independence of the Fed, and you're in the record as saying that naturally the Fed's independence is absolutely foundational to economic success. How much of a threat is there, though, do you feel, to independence of the Fed right now?
I think the Fed's independence is quite strong. We have ultimately our source of our strength institutionally comes from Congress. We are created by the United States Congress. I think leaders on both sides of the aisle, Republicans and Democrats in Congress, strongly believe in Fed independence. And everybody who works at the Federal Reserve is committed to Federal Reserve independence and conducting monetary policy, not focusing on politics, but focusing on data and analysis. And I'm confident that will continue.
What is your frame of mind at the moment for quantitative tightening? Does that get put on hold for now?
We slowed it down a couple months ago. We announced that we were slowing down the reduction of our balance sheet. There's an uncertainty about what is the fundamental demand for reserves in the U.S. banking system. And so as we get to that point of what we call ample reserves, we want to approach it slowly so that we don't tighten the balance sheet too far. So I think that we're doing the right things right now. We've shrunk the balance sheet by quite a bit over the past couple of years. It's continuing to shrink going forward. So I think we're on a good trajectory, and I'm not anticipating some major shift in that anytime soon.
I think you can pinpoint any time in history, any time in the market, and you can always say that there's going to be an element of uncertainty, which of course the markets really hate. Neel, but right now, do you feel that the uncertainty is particularly high compared to other periods that we've seen in the last few years? And what in particular, maybe apart from the tariffs, is it that keeps you up at night?
Well, it is a very high period of uncertainty. A couple months ago, the shift of sentiment in the U.S. in January, I think there was exuberance amongst most businesses that I talked to. By March, April, that had dramatically changed. It reminded me of March of 2020 when COVID hit, that dramatic change in sentiment and of the outlook. And so that uncertainty is still with us. There's still, I think, a long time to go for these trade negotiations to provide the ultimate clarity. I think in the U.S., there are big policy changes that are being undertaken right now. We've talked a lot about tariffs. Immigration policy is enormously important to the U.S. economy and the major countries around the world. That's another source of uncertainty. And then, of course, there are fiscal changes that are being deliberated in Congress right now. All of this is adding to just some uncertainty about what is the ultimate destination, what's the new normal for the U.S. economy. And I think businesses and households are trying to navigate that.